Hey everyone, welcome back to Corporate Decoder. Today we're diving into Snowflake Inc's latest filing, and let's just say there's a new sheriff in town when it comes to their finances and is bringing some serious firepower. So what's the big news? Snowflake Inc is getting a new Chief Financial Officer, Brian Robbins. This comes after their previous CFO, Michael Scarpelli, announced his intention to retire earlier this year. Scarpelli is sticking around for a bit to make sure the handover is as smooth as a well-written query. And he'll also be doing some consulting work, which is pretty standard for these kinds of transitions. He's also going to see his existing stock awards continue to grow or vest, as they say in the business, which is a nice bit of continuity for him. Before we get into all the juicy details about Brian Robbins and his compensation, if you're finding this breakdown helpful so far, make sure to hit that like button and subscribe to the channel. And hey, we've got a fantastic community over on Discord where we dissect these filings even further, so join us there. The link is in the description below. Now, about Brian Robbins. He's 55 years old and he's no stranger to the tech world, most recently serving as the CFO for GitLab since 2020. Before that, he had stints as CFO at companies like Csense, Silence, and AlienVault. He even held some senior roles at VeriSign, so the man has a wealth of experience in managing the money of growing tech companies. He's also on the board of directors for a couple of other companies, which shows he's got a broad understanding of corporate governance. Let's talk numbers because that's what we're all here for. Snowflake is known for its cloud data warehousing, and its stock symbol is SNI, trading on the New York Stock Exchange. This report confirms they're a Delaware corporation, which is not uncommon for tech companies. Now for the really interesting part, what is Snowflake paying its new CFO? The offer letter lays it all out. Brian Robbins is going to get a base salary of $500,000 per year. That's a solid number, but it's just the tip of the iceberg for executive compensation. On top of that, he's eligible for an annual cash bonus. And here's the kicker. The target bonus is 100% of his base salary. That means if Snowflake hits its performance goals, Brian could potentially earn another $500,000 through this bonus. So we're talking about a potential $1 million just in base salary and target bonus. But that's not all. Snowflake is betting big on Brian and they're compensating him accordingly with stock. He's set to receive a new higher restricted stock unit award valued at a whopping $28 million. This isn't just handed over all at once, it's going to be vested over time. Typically, these grants are designed to keep executives around and motivated to drive long-term growth. Specifically, 7.5% of this $28 million award will vest every quarter for the first 8 quarters, which is 2 years. That means after 2 years, he'll have vested about $16.8 million of initial grant. The remaining portion will vest at a rate of 5% per quarter after that, so this is a significant long-term incentive. And there's even more. He'll get another restricted stock unit award valued at $2.5 million. This one is going to vest in 16 equal quarterly installments starting later this year. So he's getting a total of more than $30 million in stock awards right out of the gate, spread over a few years. On top of all that, he's also eligible for something called the Annual Market Review Program for the fiscal year ending in early 2027. What this means is he could receive another $5 million in equity awards, potentially split between restricted stock units and performance-based restricted stock units. So we're clearly looking at a multi-year compensation package north of $35 million. This signals how important they believe the CFO role is for Snowflake's future. He's also going to be part of their severance and change in control plan. This is pretty standard for executives. It means if his employment is terminated under certain circumstances, or if the company is acquired, he'll have certain protections and payouts, which is designed to give him security and align his interests during potentially turbulent times. It's important to remember, and what the filing itself states, is that this description of his offer letter isn't the whole story. The full details are in the actual offer letter, which is filed as an exhibit. This approach of significant stock grants and performance-based incentives is common in the tech industry, especially for key leadership roles, to ensure executives are heavily invested in the company's stock performance and long-term success. The filing also explicitly mentions a press release announcing Brian Robbins' appointment. This is standard practice under Regulation FD, which ensures that all investors get the same information at the same time. It's essentially a public announcement to make sure everyone is in the loop. So that's the big news from Snowflake this time around. It's all about leadership transition at the CFO level, with a significant investment in their new financial leader. Now let's talk about what this all means. Snowflake is in a competitive space and having a strong financial leader is crucial. Brian Robbins' compensation package, particularly the substantial stock awards, signals that the company is serious about its growth strategy and wants its CFO to be deeply aligned with that vision. The scale of these grants suggests confidence from the board in Robbins' ability to manage Snowflake's finances and contribute to its future success. One thing to consider is how these large stock grants will impact earnings per share over time. As these stocks vest, they can dilute the value of existing shares. However, the idea is that the company's growth will more than compensate for this dilution. We'll be watching to see if Snowflake's performance lives up to the investment they're making in their new CFO. Risks for Snowflake often revolve around competition in the cloud data space, the pace of innovation, and macroeconomic factors that can affect IT spending. A strong CFO needs to navigate these challenges effectively, manage costs, and ensure the company has the financial resources to invest in growth. The large compensation hints that the board believes Robbins can do just that. Finally, this move seems like a proactive step to ensure financial stability and strategic direction as Scarpelli moves on. It's a substantial capital commitment to their new CFO, which, if successful, should translate into positive long-term performance for the company and its shareholders. What are your thoughts on this massive compensation package for Snowflake's new CFO? Do you think it's justified by his experience and the company's ambitions? Let us know in the comments below. If you found this deep dive valuable, please smash that like button and subscribe for more corporate financial insights. And don't forget to join our Discord community linked in the description for even more discussions and analysis. Thanks for watching, and we'll see you in the next one.